Hey everyone, this is Kushagra. I'm a practice director with the GBS and GCC team, and I lead some of our conversations with the healthcare and life sciences GBS GCC organizations based out of our Gurgaon office here in India. Shivi?
Hi everyone, Shivi this side. I'm a practice director with Everest Group. I work with our clients in the CPG and retail segment, particularly on all things GBS, be it their shoring, sourcing strategy, and even workforce optimization.
Hi everyone, my name's Tejas. I'm a senior analyst with Everest Group. I primarily work with our BFSI clients and based out of Gurgaon.
Everyone, I'm Rutashu Agarwal, your fourth host and SME for today. Lead the GBS and GCC practice for Everest Group based in London, and also focus on our broader enterprise business in the EMEA region. Um, this is our last webinar for the end of the year, so thanks for joining. I know everybody's looking forward to holidays, but there's always a lot going on. So what we thought is we'll reflect on what we have been seeing in the market for the last few weeks, but also level set some of the messages as we leap into 2026 very quickly. Let me start by sharing something I feel incredibly good about from last few days. Uh, for those of you who know and have attended Engage conference, know how passionate we are about bringing our clients together and enabling true honest interactions and engagement. We took Engage to India this year in November, and we had about 200 plus delegates joining us from different industries, fairly senior audience. The theme was the now and the next of GCCs. So today we are bringing some of the key takeaways from that, of course, expanding the relevance from a broader GBS and GCC attendee perspective. And we're going to talk about what we learned, but also what are we looking forward to as we head into 2026. The format that we will follow today, very quickly, if I break it down, we'll have four key parts of the session. So we'll start by talking about three convictions. So on the next slide, we'll see some of this laid out as well. So we'll have three convictions. These are foundational beliefs. We see that a lot on an ongoing manner. Most of you will relate to it. Then we move on to cover five provocations. These are early trends, emerging trends. We already see some activity, some GBS ahead of it, others trying to solve for it, but many more who are yet to jump in. But these are the ones that will impact a lot where the model, where the industry is headed. And lastly, we want to bring it together and we want to give you a little bit about what should be the playbook of our 2026. Now, we'll not even pretend to try and solve for all of it in a 60-minute webinar, but we do want to put some big items on agenda out there. So watch out for that. We will take questions during the webinar and we will have dedicated time towards the end. So please use the Q&A window to keep submitting your questions. If we are able to get to them live, we will. Otherwise, we will take them up towards the end. With that, Shivi, you've been working with a lot of our clients in this space. As you reflect back on where we stand as of today, what are the three big convictions?
Thanks, Rohit. Uh, Let me dive straight into the convictions. And the first one is actually pretty exciting because it talks a lot about where the model is headed, how it's shaping. So it was not long ago when enterprise were looking at GBS and GCCs as controlled trials. Fast forward to today, the picture has completely changed. If we look at the adoption patterns, if we look at the deepening of the scale, it will make it very clear how enterprises are now viewing GBS and GCCs as their strategic must have. Gone are the days when they were only pilot stages or in the experimentation mode. Now, let's bring up some numbers to bring this to life. In the last 5 years alone, the market has expanded by more than 50%. We're now looking at 6,000 offshore and near shore centers globally. This number alone, this tells us the kind of confidence that the enterprises are betting on this model. If we talk about the rate at which this is happening, that's even more inspiring. 4 to 5 new setups every other week. The operational trajectory, even that's equally strong. In terms of the companies that have been setting up, we see 6% growth in these companies. If we talk of the headcount, even more impressive, it's double, 12%. What does this tell us? Not only we have new centers that are coming into play, but even the existing ones, they're adding more to the scope, they are deepening their scale, and they're adding new capabilities. There's a clear shift that we are seeing in the kind of work or the scope that's being driven out of these centers. The shift now is towards end-to-end ownership. No longer is a time when we see pockets of work here and there. Entire value chains, entire digital journeys, increasingly complex tech and business functions are being anchored from these centers. And all of this is not happening silently. It's happening on back of strong enterprise sponsorship. CXOs are leaning in. They are betting high on the model and are really expecting these centers to step up as true value creators. Now, let me call out something which often many people get it wrong. If you feel that you see a GBS, GCC everywhere and the market is near saturation, no, that's not the case. Only 35% of global 2000 companies have a center. This tells us there's still a room full of enterprises that are yet to explore and tap into the full potential of the model. We talked about the growth of the model. What's equally important is to understand why are enterprises betting so high on the GCC. And that takes me to our second conviction. The way that success is getting measured has changed fundamentally. For the longest time, the conversations around GBS and GCCs have anchored around cost and scale. How much are you saving? How much are you adding in terms of the headcount? But the story has changed now. We're not saying that cost is no longer into picture. Cost is still a character, but impact is now emerging as the main character now. If we look at the cost and how the trend has shaped in the last 4 to 5 years, yes, the costs have gone up, but necessarily doesn't point to inefficiency. It points to evolution. Pyramids are changing, hiring patterns are changing. The value that's being added by these enterprises in the form of innovation, transformation, agility, enterprise transformation, it's far adding to the impact than the cost increases. The question that leaders should be asking is not about what does it cost, but it's around how do you control, influence, and scale that impact. If we move to our third conviction, we've already established that the model has gone strength to strength, but with this new strength comes new set of challenges and complexities. GCCs today, they are expected to step up. They're expected to deliver quicker, innovate faster, operate more strategically in the alignment with the enterprise, all while navigating challenges, a plethora of challenges, be it macro headwinds, be it legacy friction, execution choices, leadership levers. We as analysts couldn't help but put a framework to it. What's important to understand is that it's no more just about execution. It's about understanding what's not in your control, what is in your control, and where do you need to double down. If I talk about macro headwinds, think of policies, tariffs, geopolitical situations, technology shifts. These have high impact, but they are hardly under our control. The environment in which the GBS and GCCs are operating today it's changing far quickly than the organization charts in it. If we talk of legacy friction, we qualify this as low impact, low control. Think of fragmented governance, legacy hierarchies. So these are the frictions that nobody accounts for. These can't be eliminated overnight, but knowing or being aware of them solves half the problem. Then we have something that's on the opposite end of the spectrum, execution choices, where you have most control, most influence. It's more about how you design and less about how you deliver. And then we have the last quadrant, leadership levers. This is what separates the good from the best. Here we think of how you are building your GCC narrative. How are you aligning with the enterprises? So all these things come into picture when we talk of leadership levers. As we wrap the three convictions, it's important to recognize that yes, it is a moment of opportunity, but it's also a moment that demands sharper focus and more intentional leadership. With
So
that,
Shivi,
Rohit, I'd like to, yeah.
yeah, no, thanks for that, and feel interesting because convictions are not always showcasing the strengths of the market, but also how the narrative is shifting, but also the state of flux that GBS and GCC leaders find themselves to be in. That's also a pretty well established reality. For our attendees today, if you feel we have rushed through and wrapped up our convictions pretty quickly, yes, we have. That is by design, because we thought we will use most of the time today to talk about the future, the provocations, and the playbook. If anyone wants to deep dive into any specific aspect on the convictions, there is a lot more data where this comes from. Do reach out to any of our SMEs today or your Everest Group point of contact. We'll be happy to talk about it, and you can always post questions in the chat window. Before we get into provocations, I wanted to go back to engage, right? We spoke about it in the beginning, but during that, in a room full of 200 plus delegates representing about 130, companies, we asked them, how do you describe the next decade for GBS and GCCs in one or two words? So let's look at some of the things we heard, right? I thought it would be good to paint that picture, bring some of that voice of the market before we get into our provocation. So as we look at the next slide, we wanted to look at what did people tell us. And very interestingly, I'll not try to read all of it. There are also a couple of funny words if you find here and there. Somebody had a good laugh in the room as well. But staying focused on the business. In the middle of all of this, reinvention, value, impact, reimagine leadership. These are the words that jump out. It is neither that the world is all about GCCs, nor is the GCC story hitting any roadblock anytime soon. However, there is awareness that there is a urgent need to think about reinvention to transform, to grow, but also to manage disruption. We see those words there. To focus on the value or the impact you create, to deal with the impact of AI or agentic or innovation, those words popped up, but also to think about what is the role of the leadership. How can you create thought leadership? How can you create value amplification? How can you deal with uncertainty? So some of those themes, really popped up. It will be great to hear some of your thoughts. So feel free to use the chat and share what comes to your mind, your reactions to this in the chat window. Uh, we'll keep moving. So as we go on, we promised you a few convictions and then a few provocations. So let me get into let us get into the provocations next. To recap, provocations are where we feel some companies are starting to make some efforts, but these are major forces which most of you will need to deal with in different capacities and different sequence. Hence, there's a lot of focus on some of these. Uh, Before we unveil the provocations, I want to ask this group a question. So watch out for a poll question that is coming up now. The question we have for you is that in an AI first world, how do you expect your GBS GCC headcount to change over the next 12 months? And there are a few options down there. For those who had a bit of a reaction, why are we still talking about headcount when the momentum is shifting? Apologies if it made you feel bad, but the reality is that we are stuck in the middle of change and run situation. So still a lot of headcount growth, as Shivi noted earlier, is pretty much a reality. Some interesting responses starting to come in. I still see only about 50% or less attendees have taken this up, so we'll give it a few more seconds. Kushagra, as we see some of the early results, how do you read into this? And I can see 36% people are still expecting 5 to 15% increase in headcount, while acknowledging AI will kind of impact productivity. So how are you looking into that, Kushagra?
So Rohit, if I were to put my money on this, I would have gone with either option two or three, which essentially means moderating out a time frame that is 12 months and the pace at which some of this is growing. Uh, that GBS GCC
Just
model
checking
is
if
here to stay.
Kushagra, sorry for interruption, but I couldn't hear you in between. So just checking with one of my colleagues if that's me or you, just to make sure attendees are able to hear us clearly. Okay, Kushagra, please carry on. There may be there was a mild disruption at your end, but please carry on.
Yeah, yeah. Uh, this
Okay. While Kushagra probably fixes his audio, let me take this up. I think overall we are seeing about 48% attendees acknowledge that they expect 5 to 15%, 37%, and about 11% expect more than 15% headcount. So that, in my opinion, is pretty strong. At the same time, on the other hand, there are roughly about 51% who are in different capacities of expecting either stable headcount, and then about 37% expecting more than 5% reduction in the workforce as well. So very interesting, data to see. Something always helpful to understand what's the sentiment in the room. We'll move on, and let me try and cover a couple of messages. But Kushagra, when you're back, please do chime in. Uh, the first provocation we have for you is on AI. And again, we made it this far, about 15 plus minutes without talking much about AI. So let us now talk a little bit about AI. AI won't replace GBS GCCs. I can't emphasize enough. I'm having so many conversations with enterprise leaders. This is a very popular question, especially with the CIOs who expect that, will AI take over all the workflows? Will operations go away? Will it all be tech and tech support teams and even support kind of reducing over time? No. The short answer is GCCs will thrive, but only those who adapt AI, who make it a strength rather than a challenge. Kushagra, don't want to cover all your messages or pretend to be an SME on your areas. Are you back?
yeah, yeah. So naturally, what we've seen is the data and frankly the history of the model over the last 40 years suggests something very different. Every other wave of evolution has created a fair bit of disruption, but regardless of that, the model itself has survived. So the provocation really here is GBS and GCC model is not at risk because of AI. The real risk comes from how GBS leaders actually choose to respond to it. Now we are observing two divergent paths. On the left of the slide is the path that a surprising number of organizations are drifting towards without realizing it. And if you could just open that up. Now, this is the road of incremental innovation, of delaying investment decisions, of waiting for AI to become simpler, cheaper, or fully mature. Sad reality is that road closes very quickly. We've seen the same pattern in previous waves of transformation where centers that did not modernize themselves actually faced consolidation. They became non essential. On the right hand side is a more ambitious path. AI becomes the accelerant of a fundamentally different type of GBS GCC organization, one that actually expands its influence across the enterprise, owns outcomes, and acts as a core innovation and talent engine. The early evidence here is interesting. The organizations that are moving fast on, let's say, redesigning processes, on retiring legacy debt, and even embedding AI into core workflows are already creating that disproportionate value. This mirrors the shift we are seeing across organizations where impact is actually overtaking cost and scale as the true differentiators of the model, like Shivi highlighted earlier. The point here is not every workflow requires AI tomorrow. Mature organizations are investing in readiness of AI, in capability, and in operating models that are built for AI rather than retrofitted for it. Now, if we accept that AI separates those who thrive from those who stagnate, the next logical question is why has AI struggled to deliver enterprise wide impact so far? And if you could move to the next slide, and obviously we like to use funny acronyms for a few things, including this one. But essentially, our belief is that there are four forms of debt that any organization needs to retire before they actually start creating value at scale. PTSD, which in today's context is process, technology, skills, and data. That's the four form of debt that organizations need to retire. But do they really follow that order? Not as per our understanding. So many organizations have focused on the visible part of the iceberg, which is technology. Yet technology is often the least constraining form of debt that we see across organizations. The deeper constraints sit in the layers underneath, which are process, data, and skills. Now, this is consistent with what we've seen across GCCs globally. When AI is applied to processes that are fragmented, inconsistent, or fundamentally not designed for decisioning, the outcomes are limited. When data is incomplete, siloed, or of poor quality, AI cannot reason, predict, or generate reliability. When skills lag behind, teams tend to over index on pilots, and there is not much happening on innovation at scale, execution at scale. And when technology is selected without addressing the other three layers, organizations often experience expensive POCs fail. So process comes first, data is a close second, followed by skills, and then comes technology. The enterprises generating value are the ones attacking these debts systematically, layer by layer. And that is what truly unlocks the full promise of automation, generative AI, and agentic AI, or what we like to call as the A cube or A3. The biggest point here is the role of GBS and GCCs is very much central to this. This is where end-to-end processes can live, where data pipelines can be built, where skills can evolve the fastest, where cloud and digital foundations have matured sufficiently to support AI-ready operating models. Addressing these debt is not a technical exercise, it is a leadership responsibility, one that determines whether AI creates productivity improvements at the margins or transformational value at scale. The provocation here is very direct. GCCs that take ownership for eliminating PTSD, now not in that order, obviously, will be the ones that generate measurable, sustained value across the enterprise. And those who do not will find themselves with technology in place but value unrealized. Our next provocation brings us to the core challenge faced by many GBS and GCC organizations. On the surface, what we see is performance appears strong, costs are under control, SLAs are green, volumes are being met, budgets are under control. So the left side of the watermelon looks reassuring. However, when one actually slices deeper, as the slide visually represents, a different reality often emerges. Stakeholders experience limited agility, inconsistent partnerships, insufficient value beyond efficiency. The orchestration ability that GCCs aspire to build not always translates into day to day experience for all stakeholders. Now, this is what we call the watermelon effect. It looks green from the outside, but is red within. Now, why does this matter? Because centers that are not perceived as indispensable face increasing risk of contraction, consolidation, or even closure at times. This is not a visibility or a cosmetic issue across organization. It influences investment decisions, leadership sponsorships, and so on and so forth. So, becoming the center of choice means moving beyond operational performance to business partnership. It requires a tremendous shift from a mindset perspective. You've got to move away from the traditional contract of service delivery towards a broader contract of enterprise value delivery. It means demonstrating agility, shaping outcomes, contributing to growth, orchestrating functional impact, and it also means being proactive in identifying red areas before business stakeholders do. We track roughly close to 6,000 GPS GCC organizations, and we truly understand that not all will make through with this transition. But there's a clear path, centers that commit to eliminating some of the watermelon effect, that invest in some of these capabilities, that articulate value in the language that CXOs prioritize, become indispensable. So, becoming the center of choice is both a defensive necessity and a strategic opportunity for you.
Thanks, Kushagra. And you're right. In fact, something that's not on the slides, but one of the provocations we have, and I'll rather call it a controversy at this stage, yet to see more trend, but we believe we might be ready to see the largest wave of GCC and GBS divestitures as well. Because as Kushagra said, as the going gets tougher, some who are at the top of their game will become much more strategic for their company. But we are tracking 6,000 plus, and not everybody can make that pivot. So some are going to face a lot of challenges as well. As we look forward, before we get to our third provocation, I wanted to inform you all about something. Every year, for those who track our research, we do a key priorities assessment. So on the next slide, we wanted to share these details with you. Our key priorities in technology and services survey for 2026 is out. You can access that through the QR code in the on the slides. All the slides will be shared with all our attendees today. But also, we have shared a link in the chat here. Takes about 5 to 7 minutes. If you participate, you will get a copy of the findings. This is a great way to understand the key stakeholder sentiment, what is the mood of the market per se, heading into next year. So watch out for some of this as we bring this together and then share our findings early January.
Perfect. Thanks for the offer, Rohit. I would strongly recommend folks attending the webinar to take that offer. Moving on to the next provocation. Let me start with a simple idea. Your GCC model is fundamentally a talent model. Everything we build, capabilities, value, influence, comes from quality, depth, and readiness of our talent. And that's why talent is both our biggest strength and potentially our weakest link if we stop investing in it. As we look at talent and capabilities, we believe that GCC leaders often run into a series of paradoxes. Now, why do I say paradoxes? It's because these are conscious decisions into trade-offs into trade-offs between right and wrong options. And in most cases, both paths are correct and both can put you in a fix. The chart helps illustrate the journey most GCCs go through. On the x-axis, we're looking at typical evolution, starting off as an arbitrager, moving into service provider, optimizer, transformer, and eventually becoming an integrator with the business. On the y-axis, we're mapping talent sophistication and future readiness, which is basically talking about how capable, adaptive, and forward-looking the talent model is. As we look at a progression of a GCC, and being mindful that not everyone is starting at a stage one, there are certain evolutionary bumps that all GCCs go through across their journey. An early stage GCC deals with the question, do we double down on cost advantage, or do we start paying capability premiums to build high value roles? Both paths are correct, but each shapes your trajectory a bit differently. As we move up the maturity curve, the paradox shifts to skill scale versus skill scarcity. Today, one of the biggest differentiators skill scale versus skill scarcity. The conundrum is, do we skill for scale, building large pools or common capabilities? Or do we scale for scarcity, which is focusing on niche, high impact skill areas? This is where talent models sometimes do seem to get a bit stretched as well. Further up the maturity curve, the challenge becomes, is process excellence enough? Today, one of the biggest differentiators for a GCC is moving beyond process mastery to deep business and domain context. But even domain depth presents a new dilemma. How do you combine domain expertise with digital agility? If we build domain depth, how do we ensure that these experts are digitally agile? They're comfortable with AI, automation, and whatever new platforms that are being developed today. Because domain without digital agility can seem to get outdated really quickly in today's state. So at every point in time, there will be such paradoxes and choices for GCCs to make. The ones who succeed are the ones who diagnose where they are on the journey, which paradox they need to solve for now, and anticipate what's to come next. And this connects back to a sentiment that we're increasingly picking up from our conversations with GCC leaders, that our talent across operations, tech, and digital isn't fully ready for the business we need to support. While this is provocative, it's also healthy. Acknowledging readiness gap creates an urgency, opens up a space for an honest dialogue and prioritization, and also reduces complacency. Just re-emphasizing, talent is your greatest strength, but if you do not continuously invest in it, it will become your weakest link. Moving on to the next provocation. When we talk about talent, we inevitably talk about location. It's a fact that in today's global services landscape, India is absolutely irreplaceable in terms of the depth of talent, the diversity of roles, and the overall cost and capability advantage it offers. If we were to zoom out and look at the broader market landscape in India as well, there is yet another important dynamic that pops out. Over the last 40 years, GCCs in India have undergone a remarkable journey. We are today currently tracking around 1,900 GCCs in the country. But what is truly striking is the inflection point. The first 35 years created around 1,300 of these GCCs. And just in the last 5 years, we've seen the market grow into 1.5x the scale. If you were to do the maths, this nearly translates into 2 new GCCs a week. And this is a level of growth and a concentration that the market hasn't seen before. However, having said that, with so much exposure to the service delivery market, there are also certain risks to be aware of. We've discussed talent quality before. It's not just about the size of the talent pool, it's also about employability and readiness. Looking back a few years, the surge in demand in 2021 did give us a clear idea of this picture. Looking how the rapidly demand went up and how challenging it became to find the right talent. That episode shows us that scale doesn't automatically translate into availability or suitability, which is why we can't build everything on one location without safeguards. Yes, India accounts for 40% of the global services workforce. No other market comes close to this. However, having said that, 70% of the enterprises operating in India have no second location. That creates a concentration risk, especially if we were to face another surge in demand like we did 2-3 years ago. Yes, India still delivers one of the most attractive cost and talent propositions, but even with that favorable talent proposition, we still see a lot of cost inflation and talent wars persisting, especially for specialized and niche digital roles. Even in what a lot of people would call a softer market, finding high-end talent and hard-to-source skills requires paying a significant premium over the market. From a market expansion standpoint, India has grown by 50% over the last 5 years, which is remarkable. However, alongside that growth, we also see certain policy shifts and geopolitical shifts. The recent India-Pakistan conflict is an example of that. While these shifts are not enough to derail the momentum of India's allocation, but it is enough to introduce an uncertainty that leaders need to plan for proactively. Net, the provocation here is not that India is losing relevance, quite the opposite. India continues to be an extremely important part in the GCC landscape. But to build a sustainable and a resilient future talent model, leaders need to think in terms of a GCC network strategy and India plus one per se, where India remains the hub, but is complemented by additional locations that bring resilience and differentiated capabilities.
Thanks, Tejas. And, it's a bit revealing and surprising at the same time when you say 70% of enterprises with the India GCC do not have a second location. I mean, that's not something which one intuitively relates to. That shows both the strength of the model, and coincidentally, all Everest Group SMEs on the call today are of Indian origin. Testament to the talent model of the country, but at the same time, a little bit of concentration risk, which in recent times have made companies a bit jittery. As we move on and we look at our fifth provocation, that's a little bit, about the role that all of you as GCC, GBS leaders are expected to play. Your CXOs trust you to operate. Now they want you to orchestrate. What do I mean by that? For the longest time, GBS models were set up to consolidate, scale, standardize work. On top of it, you have added across tech and ops capabilities, looked into transformation, are venturing into AI, are continuously looking to solve more business problems. However, and I'm not saying this applies to everyone, but a common feedback lever remains that GBS GCCs still deliver what they're asked to deliver. Net net, they act as operators. How can you take proactive lead in delivering what the value, dealing with the business ambiguity, talk to business leaders as partners, and make things happen for them? This is not about controlling a state. This is not about owning just a single module. This is about looking at it more broadly, whether it's outsourced or insourced, whether it's in one location or another. How do you bring it all together and let the business worry about the main business problem and feed your solutions into that? We have a little bit of market findings to relate to that. So over the years, as we look at the next slide, we have seen and worked with hundreds of GBS GCC leaders, and many of them know, and rightfully so, that they add a lot of value to CEO agenda. However, the enterprise leaders don't understand that fully. They don't agree with it. This has not been quantified meaningfully. The feedback is still largely based on stakeholder sentiment. Sometimes it's positive, and often it ends up being negative. Most of the GBS GCC value proposition deck almost never get to articulating their role in terms of CXO priorities. Let aside start with it. It's always about how many locations we have, how many FTs, what portion of scope. But it doesn't start by talking about what is the top 5 CEO priorities for the next 5 years and how we're feeding into that. This, as we have discussed with our clients for so long, has been sometimes debated. Why should we present our value? Our value is well known. Uh, we are like any other strategic team, all of that. So in the last year, we have done an assessment. And again, this is a hard to do assessment because you, as GBS GCC leaders, need to open yourself up for additional, kind of evaluations. But some participated, a focus group. And let me show you some results on the next slide. As we look at the results, we analyzed responses from heads of GBS or GCCs and the same questions around what is the value, what is the role of GBS was given to enterprise leaders. And we didn't do extensive benchmarking for this purposes. We do a lot of benchmarking separately. But here we checked for how do you perceive the role? How do you perceive the value? Look at the results. There's a big body of research here. I brought only the key finding. The blue line indicates what the global leaders think of GBS GCCs. The green line indicates average score of what the GBS GCC leaders think of their organization. Not surprising. The green ratings are higher than the blue ones, but look at it, an average gap of about 20% across most dimensions. What is the one dimension where the gap is the least? Performance and delivery excellence. The area which is most often very rigorously tracked and regularly reported. Many of you, if not most of you, have committed to performance levels. There are clear goals. So even there's a marginal gap. but without reading too much into it, on all other areas, there is a gap. There are very interesting insights when we start looking deeper into it in terms of uh, differentiating by the CIOs or the CFOs or different BU heads. So you start looking at it. In fact, in some of our recent assessment, one of the Fortune 10 company, what did we realize? They had about 30 global leaders take the assessment. Out of them, about 10 or 12 were marked as the highest priority stakeholders, and then the others were in different categories. Those 12 had the worst perception, and those with the lowest priority stakeholders had the highest perception, the better perception. uh, that the second part is not a bad thing, but clearly it informs of some miscalculation in where efforts are being channelized. So as we do it for more and more of our clients every week, new kind of insights are popping up. This is not a prescription enough to dictate what you should do, but this is helping identify the problem, the gaps, and then put together with some of the additional work. This helps to lay out a roadmap to fix this gap, to have the right level sets. Kushagra, you and your team have been doing a lot of this work with our clients, and I know you wanted to offer some of this to our attendees today. So why don't you talk about that?
Yeah, thanks, Rohit. So what we have here today is an assessment that actually covers what we have here is a very simple yet powerful tool that actually talks about how you look at GBS and how does your enterprise organization looks at GBS. We've asked some 20 questions, summarized those 20 questions into 5 buckets. These buckets being strategic role, talent, how do you look at, let's say, innovation, how do you talk about agility, what's the performance of the organization, right? This survey is largely going to be a 10-minute exercise. If any of you are interested in understanding the perception gap in a little bit more detail, we are here with this complimentary offer. Like I mentioned, this is an ongoing study. We've showed some of the early results. I would strongly recommend you take this assessment for your GBS leader and CXO stakeholders. It does not take more than 10 minutes. We can come back to you with a one-on-one readout session, calling out some of the alignments as well as the misalignments. This can help bridge some of the alignment gaps and foster stronger collaboration across the organization.
Thanks, Kushagra. And yes, I mean, many attendees have a basic question, so let me tackle it right away. All the data that you share, all your answers, they are completely confidential. Only your company, only your designated set of recipients will see your answers, your results. Otherwise, we'll only share aggregated results and market trends in our broader assessment as we shared today. Also, as we wrap up our provocations, wanted to recap some additional messages we heard from Engage Bangalore. So across a bunch of these themes, what did we hear? Somebody said, if you're not scaling AI, you're scaling irrelevance. I think that's a bit dramatic, but gets the message across, right? If you're not thinking about role of AI at scale, probably there is a problem. At the same time, connected to the one at the bottom, AI isn't replacing delivery, it's reinventing it. The human-centric talent model is probably not going away. We are staying pretty much on top, but we have to reinvent with certain urgency, otherwise we'll be left behind. GCCs, as Kushagra and Shivi noted in their earlier comments, they are the ground zero for future enterprise talent. There is a huge dependency. Most of the companies we help set up GCCs in the recent times are not doing that for cost. Cost is important, but it's a means to an end to get savings to reinvest in strategic capabilities, but they're moving to other locations to expand access to future enterprise talent. Uh, GCCs can't do this alone. The old buyer supplier playbook is dead. It is about unleashing the power of connected advantage. Interestingly, connected advantage also happens to be theme for our engaged Talus. earlier this year and the upcoming Engage London event. We'll talk about that later. Lastly, if you cannot prove enterprise value, you will have to justify existence. I think as much as good as we feel about our organizations, the truth is we will need to stay on top of our game. We will need a team to bring their A game. Otherwise, tough questions can be asked. These are challenging business and macro environments. So we cannot take any of that for granted, right? We are heading into the last phase of this session, and we see a fair number of questions that have come in. We will get to those questions towards the end of the session, so stay tuned. We promised you in the beginning that we'll not leave it all at provocations. We will give you something to work with as we look into next 6 to 12 months. So we will get into that part very quickly. Sharing some additional data that we heard from our clients. So as we move on to the next slide, we asked a bunch of our GBS and GCC leaders, what do you think you will operate like by 2027? And we're not talking about 5 years, we're talking about almost, we are in 2026, so we're talking about the following year. Many of that they will be autonomous outcome owning entity, a long way from being cost centers. A large number of that believe they will be operating more like a platform, data API-led ecosystems, integrating modern technology with some human support. And some of them had some interesting answers. So this was a little bit of brainstorming done at Engage Bengaluru, and we thought we will come and share some of that with us. Without further ado, Shivi, you started us with the convictions. Why don't you help us bring it all together in terms of what are the big act now messages for GBS and GCC leaders heading into 2026?
Yeah. So we have finally arrived at the most action-packed segment of the webinar. On the next slide, let's look at the 6 moves that a leader should be making in the next 12 months. What are these moves? Let's look at the moves that you need to make now, acting now. Not making a choice is not an option, but there are certain moves that have to be made now. First one is redefining your GCC narrative. Think about the GCC story that you're telling. It can't be about cost and scale anymore. Yes, they are important, but it cannot be the entire story. Start linking the impact that you are creating directly with how you are solving for your business or enterprise problems in terms of speed, innovation, how you driving experience. So think of those factors when you redefine your GCC narrative. Another and one of the most important lever here is running an AI reality check. Do a quick inventory of your AI use cases. Identify the quick wins. Use them to build credibility and then move on to explore more cases that again tie up with the problems that your enterprise or business is trying to solve for. So these are the moves that you need to be making in the next 90 days. And then there are certain moves that will help you build that momentum. So next we look at the moves that you should be making in the span of next 3 to 6 months. First one would be rethinking your talent strategy. And it also ties up to the S in the skill debt, which Kushagra was referring to. Taking a quick inventory of your talent. What kind of capabilities do you have? Where do you lag? What are the capabilities that you want to add to your talent and your enterprise to make yourself more AI ready? Next, it's about piloting multi-hub resilience. Now is a great time to pilot small teams in secondary location. Now is a great time to start thinking about secondary location. You should not be asking what is the cost of setting up that secondary site, but rather you should be asking yourself, what is the cost if I don't set up that secondary site? So these are the moves that will help you go further in the next 3 to 6 months. And finally, the most important aspect here would be enabling the right mind shifts. So we firmly believe that the AI navigation that's ahead of us, we require a new kind of leadership muscle there. And how do you bring that? You bring that with the right mind shifts, building the right orchestration layer. layer that connects everything, your AI, delivery, strategy, brings everything into the big picture is what's going to be crucial here. Then the most crucial aspect here will also be ensuring the right leadership mindsets to help you build that momentum on the journey. So these were the 6 moves that you should be making in the next 12 months to position your GBS and GCC for the next wave of everything that's planned for. On the next slide, we spoke with GBS and GCC leaders, and we really wanted to understand what's holding them when they talk about leading reinvention. And the results are really surprising here. We did not talk about cost, scale, or traditional delivery challenges. Rather, we talked about capabilities that are holding them back. 64% of respondents said that having a team that truly understands business and strategy is crucial, and not just having a team that understands processes. 16% also highlighted their ability to leverage their ecosystem partnership, platforms, and innovation systems. 13% highlighted the need to move from hindsight reporting to more real time insights. And 7%, no surprises here, highlighted how AI should be embedded at the core of the operating model and not added as a bolt on later on. As we move to the next slide and as we wrap the playbook, here is one thing that we would want to emphasize on. It's time for bold leadership, and this is what's going to separate the best from the rest. 3 key messages here. So we are done proving the model. We are now at a stage where we are shaping the model. GBS and GCC should not be waiting for the change to be handed to them. They should be driving that change, and that too proactively. Our second message is around on the window. Making the choices right now is the best choice. Not making a choice is it's what gonna put you at a competitive disadvantages in the coming years. And finally, the evolving role as we move from operators to orchestrators and then finally to value creators.
Thanks, Shivi. This is really powerful. And for everybody who works with us knows we challenge the status quo a lot. We bring our provocations out all the time, but the idea is to make the model stronger. And the model, the GBS model, and the future of this model is only as strong as the GCC GBS leadership. So, absolutely, this is time for bold, proactive, and future oriented leadership. Thanks for that. As we move on, we have about 7 minutes left. So I wanted to, we will stay on, we will get to some of the Q&A. But for some who may need to start dropping out, we wanted to thank you for listening in today. You will get all the slides. And if we don't speak again, have a good end of the year and a very fresh start to 2026. A couple of other announcements before we get to Q&A. We are gearing up for our Engage London. Very quickly. So on March 9 and 10, we are live here at Park Plaza, London. So do reach out to your Everest Group contact or use the link in the on the slide to register your interest. All those who subscribe to Everest Group Research will get a complimentary pass, the enterprise clients I meant. So please get in touch with your Everest Group colleague or reach out to one of us. I'm personally very passionate about this and keen to welcome you all at Engage. In the document, when we share it later, there is some additional reading material, our contact details, so you will find all of that. Without further delay, let me get to some of the questions that we've been receiving in no particular order, but let me take one which comes from a research that is very close to my heart. What is the reason for discrepancy in appreciation of GBS contributions between corporate leaders and GBS leaders? I think this is very interesting, and sometimes the language of the question, the discrepancy in appreciation of GBS contribution, this itself might lend to a little bit of the hypothesis. But are all the things that the GBS does considered equally valuable, considered top priority by the corporate leaders? That's a tough question. That's one that needs to be asked. Are we really aligned on what they want? And then it comes to, do they really understand what we do? Do we really understand what is the net impact of what we do? I've been in countless situations where GBS leaders know the task they deliver or maybe the project they delivered. But when you ask them what happened after that, what is the net impact on the end customer, on the end stakeholder, there is not always clear visibility. And if they don't understand it themselves, how can they articulate in their story? And then, of course, there is the packaging of it. Are you really amplifying the story? Are you really telling it on the right forums? Are you really building the stakeholder consensus? So a lot of that kind of brings it together. Hopefully that helped. If you still want to talk more about it, happy to chat on. There is another question, Kushagra. This connects to something you already answered. Let me come to that. There was a question around the sequencing of PTSD. And while we have answered, Kushagra, I see you have already answered the sequencing of it. Shivi, I know you have been working with some of your clients who have significantly invested in process. And though the outcomes are not there to see yet, we believe that's a very powerful use case. Do you want to talk a little bit more about how and why investments need to start in the process and what you have seen at few of your clients?
Yeah, sure, Rohit. So what we're seeing is as our clients, they even before they embark on their AI journey, be it Gen AI, agentic AI, or traditional AI, what they are really doubling down is on process standardization. So we're seeing these examples across CPG, retail, and even pharma sectors, wherein clients are launching 3 years, 5 years standardization program before they take on these, so that they are able to tackle this process debt even before they move to explore more ideas that are more next gen and more AI related.
Got it. And I think the massive investments that some of these companies are making to really scale their process standardization initiatives to kind of level
Yeah.
set to be ready to capitalize on whatever technology come next is important. Again, mindful of the time, I see another question. Let me take this quickly. Is do we anticipate a wave of divestments as Gen AI makes centers subscale or adopting technology becomes difficult? Absolutely yes. Uh, we believe that in GCC, GBS organization, or any other outsourcing contract where companies are not able to elevate impact, accelerate impact of AI and other technologies, not just Gen AI, and keep up, reduce the PTSD debt and convert it into a strength over the next 3 to 5 years is ripe for major disruption, and it may not be that late. It may happen in next 1 to 3 years. So either you become stronger or you may be up for a divestment. CEO are under a lot of cost takeout pressures. There may not be enough patience. Also, not a lot of companies have set up GCCs with a clear strategy in mind. So unless that is sorted, they may be, feeling the heat as well. I know there are a couple of other questions. Apologies, we may have to get back to you separately. We will follow up. I'm mindful that we are in the last minute of the scheduled time. So once again, thanks all for joining us today. And let me hand it over back to Milan